Hey everybody, what's going on? It is James here, and I'm going to go ahead and shoot this video for you all today showing you a $1,000 trade opportunity that was presented, and also show you how you can watch for these in the future. So what I'm going to do first of all is I'm going to get rid of this trend line, and I'm just going to leave RSI on the screen, and I'm going to leave the 4-hour 200 EMA on the screen. Okay, so I'm going to get rid of these lines, and what I have here, this green line is the 200 EMA, okay, which is the moving average over 200 periods, in this case 200 4-hour candles. And when this thing was coming down like this, there's two ways to catch this particular trade. You could try to buy on the 4-hour EMA, right? And if you had, you'd have got in on this tip of this candle over here, and you could have rode that thing up, which would have been beautiful. Or you could have taken a little safer path, recognize the fact that, okay, it's coming down. Let's zoom in. Let's take a look at the 5-minute chart and find an entry point. All right, so let's do that. So I'm going to move this stuff off the screen here. And what we had was this price had come down, right? It moved sideways. It had fallen. This was like 3 o'clock in the morning. And then right around here, it's coming down, coming down, coming down. And there's two ways to play this. You could either, like I said, buy in the 4-hour EMA, which was, you know, up in this 9,700 area, would have been like right somewhere in this ballpark, right? And of course, you would have been down a little bit, might have been a little scary, but you'd have been fine and popped right back up. And if you'd have gotten in there, it wouldn't have been a $1,000 opportunity. It would have been actually more than that. Probably up to $1,200, that you could have made. But that's dangerous because there's no real structure there. You're basically trying to catch a falling knife and hoping that it's not a knife, hoping that it bounces. So the other thing you can do is wait and actually let this thing play out. And when this thing came down, it shot up right here about 5 to 5.5%. In fact, from the bottom of this red candle to the top of this wick was almost 6%. So a lot of people, when they see that, they get bummed out and they think, they missed their chance, that, they should have bought down here. And then a lot of times what they'll do is they'll just kind of disregard it and they'll go off and do something else. Now, I used to do this all the time. If I missed a trade like this, I would just say, okay, well, I missed it. I'll have to catch the next one. And I would go off and, I'd start playing a video game or watching Netflix, or I go do something else in my business, or look at a different chart or whatever. But the reality is you can just wait and wait for it to come down. And in about 90% of cases, okay, there's always an exception to the rule, but in about 90% of cases, even on these big pumps, you're going to see price come right back down and test one of these levels, okay? So in this example, if I draw a horizontal line from the top of this, move here where it first tried to pop back up, we'll use a magnet to lock it in. That's the horizontal line. If I draw one from the top of this candle, that's the horizontal line, right? And then what I can do is I can just draw a bunch of these if I really want to, and say, okay, well, this is my zone of, resistance. And then resistance, once you pass through it, it becomes quote unquote support. And if you watch what happened, it came down and touched it right here. So somebody could have said, okay, I'm going to buy right here. That would have been right around 9,850 to 9,875. Okay, or if they missed that, it went up, came back down, tested it again, and this time it came down and made a low of 9,837. So they could have got in either one of those locations, and that would have been a much safer trade versus trying to catch this falling knife, right? Would have been a much, much safer trade. And then what you can do is when you get in a spot like that, guess what? You can say, okay, I'm in, now I need to set a stop loss. Well, you can just go right down to the bottom of this candle, and there's your stop loss. Okay, if it falls down through that, you know that it's lost support, and it's probably going to go down even further, more times than not. So then what you're looking at is you're saying, okay, well, I've got in. Let's just say you got in at 9,850. It's a nice round number. Okay, so let's draw up a long position on this. If you got in at 9,850, would have been right around this level here. And if your stop loss is this green line, that ends up being about a 2% loss. Okay, if you're wrong, you're going to lose 2%. If you're right, we want to make at least a 2-to-1 risk reward. Bam. So our target would be no less than $10,246. Definitely not 1,000. Okay. So if you're right, if let's say you did a 1 Bitcoin trade, if you're wrong, you're gonna lose about $200. If you're right, you're gonna make about $400. Except when this thing starts shooting up like this, you can watch it. You don't have to sell there. You can watch it and ride this trend. And until this comes down and falls through one of these old highs, see, now this is the new support that I'd be watching over in this area. Until it comes down and falls through that, I would consider this a valid uptrend. Okay, this is on a shorter time frame. It's a 5-minute chart. Okay, so there can be an uptrend within a downtrend. Right now, in the big picture, we're in a downtrend, right? This is a downtrend. But in the short frame, in the 5-minute chart, this is an uptrend. So you can just ride this, and you can see, okay, it didn't come down and break that yet. Didn't come down and break that. Didn't come down and break that. Didn't come down and break that. And then if you want to get really fancy, you can turn on your EMA 12 and your EMA 26. And basically what I do is I watch this, and as long as it's above those lines, I'm not interested in selling. I want to ride it. Okay, so in this case, you can see that it started to come down here, and it finally broke through right here. So my exit point on this trade would have been right there. So if we draw this up from the entry point in this hypothetical trade from 98.50 to that exit point at 10,739 was $887, or about 9%. So forget the 887 for a second, just look at the 9%. That means, for example, if you're trading with a $1,000 budget, that would have been a $90 win. If you're trading with a $10,000 budget, $900 win, right? If you're trading with, say, a $25,000 budget, suddenly you're looking at like a $2,200 or $2,300 win, right? Let's do the math. If you got 900, 1,800, for 2,250, right? Right around there, $2,250. Okay, huge. And you might be looking at this chart and it's like, okay, well that took a long time, didn't it? It did not. Remember, this is only a 5-minute chart. So if we look at a date range from this entry point here to the exit point here was 6 hours and 55 minutes. I don't know about you, but I would certainly be willing to take that trade, take a 7-hour trade to make 9%. Now you might be asking yourself, James, did you take the trade? I did not take the trade. And the reason I did not take the trade is because I went back to trading at night mostly. And I've been going to bed about 6:30, 7 o'clock in the morning. This morning I went to bed about 9 o'clock. So it had actually come down, but I was not watching it at that point. I was already getting ready for bed. So, I missed it, unfortunately. But this is how this works. You don't need to try to catch these falling knives. One of the biggest mistakes I made early in my trading career was I tried to catch the falling knives. When these things were going down hard and fast, I tried to just guess where they were going to stop at with no real reasoning behind it. Okay, well, this looks like it's fallen really far. Or I would do stuff like, say, okay, well, the RSI is oversold, so I'm going to buy here. RSI is a very meaningless indicator as far as the numbers themselves. Like just looking at this and saying it's oversold, it means almost nothing. Looking at this and saying it's overbought, it means almost nothing. Okay, what you're really looking for are patterns in the indicators. So for example, we had an M right here. Okay, we had this M, and it didn't let me draw it. There, we had this big M. So I actually shorted Bitcoin right here. I literally shorted it right here, sold all of the Bitcoin that I had left, and I rebought it on this drop. Okay, and I did that because of this giant M. And then if you look down here, we had another M. So still not really a reason to buy right here, okay, other than it was pinging that 4-hour EMA. But once it popped up like that, then that's when you want to start saying, okay, where's my entry? And you can see, as soon as it came down this first time, I would have been watching that level, 98.59, right? Because it looked like it found support. And if it came down and tested it a second time, and I'm sitting there trading, that is a 100% for sure I'm putting my money in that spot. I'm not telling you to do the same thing. I can't do that. I'm telling you 100% I would put my money in that spot. And like I said, and then when you're writing it up, don't panic. Don't jump out. Okay, it went up 1%, I'm out. I used to do that, right? So I'd always limit my wins, I would have terrible stop losses, so my losses would run forever. And then I would have really small profit orders, so I'd only make 1 or 2% on a trade. Let that sucker run. If it's in an uptrend, ride that trend until it breaks. Okay, and again, you can do that by putting the EMA 12 and the EMA 26 on there. Now, here comes the part where I'm getting ready to sell you something, okay? I don't care if you buy it. It's up to you. It's only $10 a month, so it's not exactly life-changing income for me, but I will tell you it will help you drastically. What you can do is you can sign up for Coinspionage, okay? Coinspionage is $1 for 30 days, and then it's $9.95 a month. And when you spot these important levels, you can just set alerts, right? And get an alert, get a text message alert letting you know that your level has been hit. And then, for example, if you want to ride the trend, you can just set an alert to let you know when the moving average is broke, and then you can go back and sell that. Okay, it's a very helpful tool. We made it very, very inexpensive on purpose because, listen, we know if you're trading, you want to keep as much money as you can for your trade budget. You don't want to be spending, hundreds and hundreds of dollars a month on tools. So if you'd like to try Coinspionage, I'll leave a link somewhere around this video. If you're watching it on YouTube, be sure and give it a thumbs up, and the link will be somewhere down in the description. And if you're watching it on Facebook, the link will be somewhere around the post, or either that or down in the first comment. If you have any questions about this strategy, be sure and let me know. But feel free to backtest this. It works on all the different time frames. Okay, so for example, if we smash this down, you can see that this went up. These are 4-hour candles. Okay, you can see that this thing went up. And a lot of people would have thought, oh God, I've missed my entry. But then it came right back down. Look right here. Bam, came down right through it. Somebody could have bought here at 11.5, 11.550. Rode it all up to 12.2, $700 trade, right? And by the way, it works the exact opposite way too. When you're in a downtrend, let's say you're short on a coin, or you're looking to see where you should buy at, they come up and test the old support. See, this was the support, came up, tested it, failed. Now this is the next level I'm looking at, came up, tested it, failed. Came up, tested it, failed. And then when it came over here and broke through that, to me, that's a trend reversal, which means now on the 4-hour chart, we're starting to break our downtrend and trying to move upward. And then of course you can just draw a trend line to see how close that is to happening, right? From the top over here. Oh, not a horizontal line, but an actual trend line. You can draw it from the top. We can just draw it right down. You can see it had a little false break right there. And once this breaks through that, then this would actually be an uptrend, right? It could start forming an uptrend where it starts going back up. So trends are super useful. If you can't find the trend, if you're trading or getting ready to trade and you don't know what the trend is, if you don't know it's a downtrend or an uptrend, you should not be taking that trade. You should only get in a trade when you know what the trend is, okay? So I want to be very clear about that. That's what I mean when I say catching falling knives. If you bought over here, you did not know what the trend was, okay? We were still going down. There's no way to know this was going to stop. But if you waited till this popped and then came down and tested this high, then you could say, okay, I think we have a trend reversal, and you could ride that baby up. It's crazy simple how easy it is to make money with this stuff, as long as you don't get emotional and as long as you don't chase trades. Yes, in this case, that popped. This could have just as easily fallen through that support, and the next level of support was way down, in my mind, around 9,000 bucks. So if this had continued to fall, it might have fallen another $700. So that's the reason you don't want to try to catch falling knives. All right. Hope you guys enjoyed the video. If you did, please let me know that you enjoyed it. I love shooting these things, but so many times people watch them and they never say anything. They don't like, they don't comment. I don't know if they're getting any value out of it. And I spend a lot of time and effort on these things, so it would really help me to know that somebody out there is watching them and getting something out of them. And also, like I said, if you'd like to be able to set alerts for all this stuff, somebody's going to ask me, James, does TradingView do that? If you already have a TradingView account, which is what you're looking at here, yes, up here you can actually set all kinds of alerts. It's awesome, right? Here's the downside of TradingView. If you're on the regular plan, which is like 15 bucks a month, they limit you to like 10 alerts, okay? With Coinspionage for $10 a month, you get 100 alerts. And I don't mean a month, I mean at one time. You can have up to 100 pending alerts at one time for 10 bucks. So that's the reason that we built it, because I have one of the expensive TradingView plans, right? And even I can only get 30 alerts on TradingView, like 30 simultaneous alerts. So I use Coinspionage for all the alerts, like my price alerts and price change alerts. And then what I do is I use TradingView alerts for things like RSI. Okay, this is James. Hope you enjoyed the video. I'll talk to you soon.